Hey, what's going on, everyone? This is Tyler Coates here along with my two co-hosts, Fibbo Swanee and Joe Saz. We are the Honest Analysts, and we are coming to you live here Thursday evening, 7:30 as usual. And that's turned out to be some good times these over the last month or so. We've gotten some nice volatility as we have been going live on the stream. I remember one time to the downside as we are watching price fall to 10K and then below for a little bit right as we are going live, and now maybe on a bit of the other side of the token where we are really ripping through the upside right now. $15,700 per Bitcoin. For anybody that is wanting to buy or sell, that is the price that it is trading at. And the title of the show poses the question whether or not Bitcoin is ready to make a new all-time high this year in 2020. So that will be our topic of discussion, which will be of utmost importance with the all-time high party that we have been planning on with great enthusiasm and really looking forward to. So we will be trying to time this obviously as good as we can in our trades, and then also in our parties. So with that being said, I'm gonna say hi to Joe and then pass it over to Fibbo for him to give some analysis. So how are you doing this afternoon, Joe? Looks like you got yourself a nice smoke.
Oh yeah, I do have a little, almost like a celebratory smoke. You know, Bitcoin's been doing some beautiful shit, and it might be doing some more actually right now as we speak. Yeah, it's getting ready. I mean, it's been pushing hard, aggressively, and relentlessly.
Yeah, 15.8 just made new high.
You know, I'll get to screen share here. I'm going to cover a brief history of what's going on. I know I'm avoiding some pleasantries here, Tyler, but this was something that I honestly.
Anyways.
What's that?
You're not very pleasant anyways.
Yeah, I haven't been. I've been said, that's been said before.
Just keep talking. It's going up.
One of the things that happened is we had a very consistent lineup of what I haven't titled yet because I never really expected this to be a condition that would be met. But my friend called it the Ruby Mine, and that's kind of like, I think, a pretty funny name for like a jewel mine or something. We'll figure it out. You know, it's still work in progress. But man, dude, the ratio of bids to asks in the 5 to 10% band alone got fucking gnarly. I mean, the gold mine itself is already a strong indicator of an uptrend, a very, very accurate and strong indicator of an uptrend. Often, you know, even parabolic rises. Now we have some Ruby mine lighting us up in the, you know, low 14Ks in that region, and it's popping, it's showing teeth. It's showing teeth. When I did a stream this morning, I was saying buy dips. This is not a market where you sell fucking, you short for 1 second. Like not right now. I'm not, you know, going to be risking that right now. It's about buying dips and just following this this gold mine, and it's crazy. Even at the top over here, we have a Ruby mine. Let's call it for now, you know, and for just, I'm sure we'll be all on the same page for now. Ruby mine lights up after a pump. You know, look at the psychology. Look, like, you know, there's so much to analyze in this information, and then we get it consistently again after a little gold mine check, and then a massive continuation into a new high, and then we're on in the brink of a new high after that. So there's, like I've said, you know, that once I wasn't really too worried about certain price targets on the way up once we got past, you know, the 13Ks, because it was like there really isn't support. I saw a wall because between the 11 and 13K region, we knew that approximately 80% of what were typically sleeper type behavior sell walls would be pulled. So sellers were already getting scared at 11 to 13K and pulling, you know, a strong trigger of stops would only trigger 200 out of 1,000 Bitcoin, and 80% would get pulled out. So, you know, we already had scared sellers going into this. And anyways, as we continue through this move, you know, we didn't, our resistance to the upside is nearly nothing. By the way, this is an aggregated order book, and you can choose what order book data you want involved, and it does change the color. So that is a new feature on Trader, TRDR. So that's something I am utilizing. This is order book data from multiple exchanges. So I could see that there's a confluence of resistance at 16K. But the truth is, this confluence is fucking futile. It's $8.4 million across fucking 10 exchanges. It's jack fucking shit right here. So I mean, we're at this point where it's like there's always that question, right? What a seller is always in a theoretical territory. If there were no sellers, the price would be infinity. So sellers are always existing in a theoretical space. They create the price ceilings, and now we're getting to a point where sellers are even scared to create these theoretical price ceilings. Maybe 20K is one. Then that's probably the strongest one I could think of, is a theoretical zone where we are likely to pull back, is probably 20K right now. There's really no other space that we spent enough time in to establish some sort of psychological barrier or support, right? So the book is just saying, it's really saying this is the irrational has begun. Not We're not in the middle of it. We're not toward the end of it. This is the irrational started maybe early, like yesterday or some shit, when the Ruby mine. Let's say this is kind of the beginning of an irrational phase to the upside, and that means that the whales who like to make sandwiches and like to be the bread on both ends of that sandwich collected Bitcoin at a range of approximately, Michael, of sailors purchase price of 9,800 or whatever average. So let's say to a couple G's up. So now we're talking about maybe an 11,000 to 9,000 accumulation zone, and we need meat. Whales don't play without meat, So I think this thing could run up, and Fibbo, your 23,000 target you've been talking about, or $22,000 target for I think a number of weeks now, it's just making more and more sense. So that's just what I see unfolding in the short time frames. A story of what I see as now in the recent past, and the story of the future is that this thing really has no one in front of it. Look at that. This is aggregated exchange data with $10 aggregation pockets with only $3,700 in Bitcoin sitting there to get filled. There's just nothing. This is a pure theoretical range where everyone is scared to sell. This is a very unique condition, and this is just the prime fucking beginnings of a irrational breakout, because these candles are going to keep looking bigger and bigger because there's no liquidity, and that's going to trigger even more emotion. There's a huge cascade effect I see playing out as a result of this. So I think
I'm very glad to hear you say that, because I haven't gotten to take a look at that aggregated book myself, and that it definitely seems like something that could be very valuable, and it is lining up with kind of what I was talking about with Fibbo before the show. I feel like the 14K level was really the last big level for Bitcoin, that 0.618 retracement that had a ton of selling pressure that the buyers just ate up, and every time it pulled back just a little bit, the support just kept moving up and up and up. And now that we've gotten through that level, I do not see much overhead, and that's good to hear that the book is kind of looking like that as well. And that is going to be why I am myself targeting a new all-time high by the end of this year, December 31, 2020. New all-time high is going to be my target. What about yourself, Joe? Are you before, after? What do you think?
Yeah, I think it's a ballsy call. But I gotta say before, and we don't have to go deep in the reasons, but at this rate, which has changed and got more aggressive, this year's is not looking like a dumb FOMO moon boy call. It's looking like a sound analytic decision. Which is crazy, because we know we've all wanted to be moon boys for 3 years now. And it's crazy to think that we're on the precipice of a sound analysis that says 20K is absolutely a reality. I mean, this is too, as a Bitcoiner who joined during that phase, late 2017. who really got into it. I think this is also significant for, us in general. So, and us, I mean, people like me who got in at that time. So this is exciting. I think this is, even though I don't show it because I'm ice fucking cold, I'm a trader, you know?
Yep, and I'm going to share something real quick that just has me very, very interested when you mentioned Moon Boys, about how crypto Twitter would be where they like to congregate and hang out, and they seem to be the opposite of Moon Boys. It's like the perfect Wall Street Journal cheat sheet situation where it's the capitulation comes first, and then it's the disbelief where nobody really believes that it can do what it's done, historically, or at least has shown the precedence to be capable of. So back here in September, around September 21 is where I started looking at the new all-time high being created this year, and mentioned it on this show to make sure that people were preparing themselves mentally for a party that could come quicker than may be expected. But
you have been.
So I just found it really interesting to see that the Moon Boys all throughout the bear market were calling for the moon. As it went from 20K to 6K, everybody was calling for the moon. And then once we actually do find a bottom and start really making a very bullish move, we're up probably 300% on the year by September, something like that. Very, very, very few people are even thinking about any sort of moon here. So that's has definitely been in the back of my mind. And I do want to run another thing by you to get your opinion. And then I wanted to get Fibbo's opinion as well, because you brought up the idea of sellers being the ones that kind of create the price. If there's like supply and demand, it's really, if there's zero demand for something, well, it's already at zero. And if there's zero supply, well, then it's, going to the moon, because there's nobody there to sell it. And that's where you maybe get some big spreads across different exchanges and this sort of stuff. So I do agree with you there that the sellers are the ones that basically will be able to keep prices in ranges, or like once the sellers pull up and there's the fewer the sellers there are, that almost has a compounding impact, like a snowball impact, of it creates more and more demand and more FOMO. So I do agree with you that the sellers are the ones that are going to be basically creating the price. And then the idea that as they get scared, as the sellers get scared, that is kind of the beginning stages of potential FOMO versus maybe the ending stages. So that's a couple interesting concepts that you brought up that, as I'm sending it over to Fibbo, want to get your opinion on both of those ideas.
Well, I mean, we're pretty much on the same page. It's just I'm like, as I'm listening to, I'm like, dude, we're arriving at some of the same conclusions, just with different words, And yeah,
and it's just curious to hear what Fibbo thinks, if he had any input on that, because I think those are good concepts.
I'm trying to process it. I'm trying to figure out what angle you guys are going with this. Like,
what's more important to the price of an asset, buyers or sellers?
I don't know the answer to that. I mean,
interesting.
That's a hard question. That's a harder question than what I feel like. Like, ask him the softer one, because that's a
because I mean, the way I look at it is, for markets to move, you need speculators. So I guess in this scenario, looking at Bitcoin market, because I'm in the commodity world all the time, so it might be a little different because I'm hedging an actual asset. So when you're looking at Bitcoin, I would say sellers would probably be more important, because without them, I mean, there's just holders, people that just hold. So I don't know. That's a really tough question. I have to really kind of think about that, because you need both, because every trade is a net zero, right? There's always a buyer and a seller. So really, there's not one that's more important than the other, because you have to have one or the other on one side or the other.
Well, yeah, I
So
guess
I don't know.
maybe it's a weird way to ask the question, but I think it's an important concept specifically for the reason. Think of how much different markets move when they're in all-time high territory versus when they're not. When you have a market that's not an all-time high, it's got all this built-up resistance that you have to eat through, eat through, eat through. Whereas when you get up to new all-time highs, there's no built-up resistance. Like Joe's kind of saying, like in this open theoretical air where it's like, where do you want to sell? Is it going to be a fib extension? Is it going to be a TD? Like what a round number? What is it going to? It's not going to be because you're losing money. It's going to be because you're up and you're ready to kind of get out. So therefore, the sellers are going to be controlling the velocity of the asset more than the buyers, because when it's in all-time high territory, it moves much faster than when it isn't.
See, I look at it a little different. I
One
look
more
at it.
point.
What now? Okay,
One more point to make is that when Bitcoin halves, the demand theoretically stays the same, but the sellers, the supply is cut in half, and we see much more than a double in price historically. So therefore, the relative impact that sellers have is more than equal the supply and demand if they were both equal. That's why I think the sellers are more important.
Okay, no, the way I look at it is probably a little different. I don't even look at it from an economic mindset or even economic thinking or a lens, because markets, to me, I don't look at it from a supply demand issue, because to me there's no really equilibrium price between the supply and demand, because I think markets are dynamic. So the way I look at it is I look at it through a financial lens. So to me, if I look through it as a financial lens and the price gets up into an area that keeps rising up into a spot where there's not a lot of resistance until you get to that all-time high, kind of where we're at right now, I think it actually is the buyers that have more precedence right now, because what happens is if you look at it from a financial world or look at it with a financial lens, is that because in economics, if you do a supply and demand thing, let's just say take the price of an asset like a big screen TV or something. If the price of a big screen TV goes down, the demand goes up because a lot more people buy that product because the price is going down. The other way is if the price of the TV goes up, the demand goes down. But I don't think that happens in the financial world. What happens if you do your analysis and look back at a lot of times, when the price goes up in a market, the demand goes up, because that's that whole fear of missing out and all of that other stuff, where that greed comes in and all that other stuff, because you get into this run and the price goes up and the demand goes up at the same time. And that's not economic thinking. Like, because if the price goes up, it's more expensive. Why would you want to be buying now when you could have bought it when it was cheaper? So I think the buyers have a little bit of a momentum going this way, because there's people that are buying it going, shit, this thing's going to 20 grand, so I better get in before I miss out. So that's the way I kind of look at it. Not that it's the right way of looking at it, but I look at markets as a dynamic world that's through a financial lens, not an economic lens of supply and demand where there's an equilibrium price. But that's just the way I look at it.
I appreciate it, and that's why I wanted to get your input, because I think that's a really interesting.
I hope hopefully I'm answering the question to what you guys are talking about. I was trying to figure out which way you guys are going with it. So.
Absolutely, yeah, you did, and these are the kind of theoretical things I like to talk about, because I don't think there is a right answer, but there's some good theory, and you bring up a good corollary of TVs, and we'll move on after this for everybody wanting some more charts. So some TVs that get sold, if there's only one seller that has a monopoly on the market, they control the price. Whereas if you have 1,000 guys making TVs, the demand, the price goes down. No matter what the demand is, it stays flat. And that's kind of how I think of it. Whereas if you have like a monopolized industry where you have a shit coin where one guy has 99% of the supply and he's never going to sell, well, he basically controls the price, and therefore the price, you kind of mentioned, the price goes up, and then the emotions come and the buyers come in and they want to buy something at a higher price. And I'm more, I guess, talking about what causes the price to actually go up. It seems to actually go up before there's a supply and demand imbalance. It goes up when and before the emotion comes in. It is kind of I guess the little bit different how I'm thinking about just a little bit earlier there. But yeah, some really good points, and I know everybody is wanting to see your charts. You've been providing some really good analysis on this show as expected, and it'll be great to see what you're looking at now as the market is burning and a turning.
All right, let me share my screen here.
Almost testing that 16K now, over 15.
Yeah, it's getting up there. The I don't even know where to start because it's been kind of crazy.
Why don't you start with that longer term chart that we were looking at?
Oh, with the timing?
Yeah, just start there to us.
Yeah, let me get that, go up here. Because yeah, you were talking about that poll that you put out on Twitter about what the timing of the next high. My timing, based on the analysis I've done, is it comes in to be right around January 4th of 2021. So when I actually did that poll, I did push 2021, even though it was only 4 days into it. But it's still kind of the 2020 or the 2021 time frame, but just right at the beginning of it. And where I got this from is just kind of messing with some cycles and timing and all that. But on this weekly chart, one of the things I have, the vertical dotted lines here are just the halvings that we've had. So back in this halving here, what I did was I took a timing of the halving to the high. So what it took from the price to get from the halving to the high was that first timing there, and then I took a couple other timings where if you kind of keep this halving to high here and keep that same timing going across here, you get the next halving right here, and then what I took with here is there was an inflection point that was beyond the halving. So for instance, this one made a high, and then it got up to this point, and this is where it made the inflection point from that high of the halving right at this point. Happened really close around December 19th or so, and that was right with this timing of the halving to the high. If you just keep this timing going, so I kind of worked this way out and kept this timing going. But then I also had the longer time frame of this green cycle from this point to this point, which is the next time we had a halving. You had the halving, and then it went to a high. So that's what this was. So the halving to the high actually matched up on the timing here, and then I just kept the timing going for the next one. So when these both match up again, it matches up, December 27th of 2021, but it's the timing of when this happened, of the inflection point of when the high broke post halving. So this one here broke December 19th, and then we had the halving to the high, then we went down, we broke this trend line, came back up, held this support, and then we worked our way back up, and then we had the halving. So if you do the timing on it, the next timing would be for the inflection point should be right around January 4th. So in other words, we should work our way up to this point, and that's when we should make the new high, and then and maybe even go even higher, of course. And then the inflection point right here just gets you to a new high like this one. And then you have this really long move up to the upside. So once we break the inflection point on January 4th, even though the price might, could dip down again, but the ultimate high post halving should happen in the same year later that year. And then after that, you should have the correction based on the way this timing is on the weekly. So the way all these cycles are kind of coming together, and this is really all based on the halving and what happens post halving. So it doesn't mean that it's set in stone and that's exactly what's going to happen. But if the last two halvings have any say in the matter on how the market's going to move, we should see January 4th, seeing the all-time high, and I got my bags packed, ready to go for the party. And then December at the end of the year should get us to the whatever the highest high will be for that year, and then maybe a correction after that. But I don't know. But that's what I was kind of looking at on some of the timings here, and it was interesting because we had I also did a high to trend line break. So you had a high here, and then there was a trend line break right at this point. And this was a real major inflection point when you look on other time frames and all that. This was a very important time. And then also you did a halving to trend line break. If you kept this timing going the whole time, the next halving or the next high to trend line break actually happened right here, which was a major inflection point, moved us down to the market, and then we moved back up and have been kicking butt since, ever since we've hit this low back here, and then kind of kicking back to the upside. So I don't know. It's just interesting. Like I was telling Saul, I wouldn't bet my house on it, but it was an interesting pattern to kind of keep an eye on over time. So I just been kind of watching it, and January 4th has been my number. If it hits it exactly, that would be freaking awesome. But I mean, I'm not gonna, like I said, bet my house on it. But interesting stuff.
Right there, could you leave the chart where that's at? Last week I was talking about the months of November and December being very, very critical for Bitcoin, and how it's historically made that's just been a very important spot for it. And your chart there is showing us that very well. If you could scroll back over to the left so that we have back to kind of 2016, 2014 in there. So 2013 high, we see there November.
I can on this one because it's a.
Yeah, just right there. November high in 2013. So that's the month of November. And then the following low in 2015, that was a December. Yeah. In 2015, the low. Right there. Here? Yep. Is that a December?
Yeah, it's a still picture because it's a.
Okay. So yeah, that
I can't get the numbers.
That sure looks like a December. That's right on the.
Yeah, I think that's what it is.
And then the breakout where you have it highlighted, or that inflection December 19. So you reached the all-time high retest in 2016, happened in a December. And then you have the high in 2017 happens in a December. Then you have the low in 2019 in a December. So you have a lot of highs and lows in December, which is a big part of the reason why I think that is a good month for Bitcoin to retest all-time highs. So those of you that want to look into that further, just pull up a chart yourself, go back and look at historical Novembers and Decembers. And in bear markets, they tend to be provide bottoms, and in bull markets, they pretend to create some potential important points. So just wanted to add that before letting you continue.
Yeah, no problem. I mean, it's kind of interesting. If I go on my, there's another chart I put on here. Let me get to my profile here. You
need to upgrade that plan, Fibbo. I guess you only need your fibs don't need a premium plan.
No, I got I'm on Pro Plus. That's all I need. This one was kind of interesting too. So it was based on the election instead of the halving, which is relatively close. So every election on 2012, 2016, 2020 is right where it was prior to it taking off on a nice little run to the upside. And now we just had an election, and it's starting to kick butt again. Not that it's going to go to 2,800 or 280,000 in November of 21, which I mean, I'd love to see it, but I don't think that's going to happen. But the interesting point was after every election, it rallies up, and then right at this point, it comes down and hits a low, and then the 61.8% level is what busted right here, went up, and then it came back down, made a low, and then the 61.8% level here at 13.3 just busted recently as we go into this. So it was just another timing thing that was kind of interesting to watch, to where we should move to the upside. Now, if we went to this trend line, from the two highs, it's about 283,000, but because of the, it's about a 1,500% gain. So not that that's going to happen, but if it had the same percentage gain as it did the last time, that's where it would put it. But I'm not saying that it's going there by any means. It was just more along the lines that I was showing. I actually showed this chart on Tone's show the other day, or on election day, and said, I don't care who the president is, because we had both Democrats and Republicans in these timeframes, and the market rallied after the election. So that's what I was just kind of showing. So enough of all that. But
and that would be another November there if that happened in 2021. So we'll have to keep an eye out for that.
Yeah, and also if you take the sine waves here, you had a low that popped to a high, came to a low, and then it popped to a break point, went up to a high, came back down to a low, kind of had that. So the sine wave is kind of interesting too on the timing, and that's why I was thinking this would be the timing of it on this move, just like it did on the other ones. So just interesting. Maybe look at November of basically a year from now as where the highest high could go. So it'll be interesting to watch. So just cycle stuff to kind of keep an eye on.
Yeah.
But let's go back to one thing I was looking at really closely was this weekly. And we just closed a month out too, but I'm not going to pull up the monthly. But I wanted to look at the weekly. And one of the main things that I was looking at was we had a high, the all-time high here, and then we went down to that low of 3,100 or so. The 61.8% of just this move, just taking the general high and low of this weekly. I mean, these are significant highs and lows. And you take the 61.8% level at 13,488. It touched it here, and that was good because it went up and it retraced, and then we made lower again. But that 13,488, if you bring it out into where we are now, this week or the week before closed at 13,771, which was the first close above the 61.8% level, and now we rallied up. So this is the second week. If we get that third week closed above this 13,488, which I would hope that we do, that this stays up here for at least another week after this week, that would give me the three closes above this level, which solidifies this point as a major new support level. So 13.5 will become a really, really good floor. And that's pretty close to what your 14K or what you're talking about. Once you break that, that was the kind of level to say, okay, we're moving now. And to me, the 61.8% level is huge if we get that third week. So that third week close to me is, and then what Joe was talking about, you get into this area of, you got all these fibs and other things you can kind of look at to possibly see some resistance spots and places to sell if you want to get in and out and all that. But if you take away all these fibs and stuff, you get into this no man's land that's between 13.5 and the previous high. I mean, there's hardly anything in here except for this one that we looked at last week, which was right around 16.6 that we talked about, where your charts were kind of showing that horizontal being very, very significant on the hyperwave. And then my fib extension, or not mine, but if you just take the high and low here, the fib extension is right around 16.6. Which would be that first. That's why I highlighted this in red. This is kind of the sell zone that to kind of look for to see if this thing pops up into the sell zone, works its way back down into that shallow fib, which right now is at 12.7 on the weekly chart at the moment, unless we made new highs. But I think we're 596. Yeah, so right around 12.7 on the 38.2%. So if we get up into this area, it's going to pop back down into this 38.2. Probably into this trend line, and that would be the spot to rebuy on a move to the upside, because if we hit this, come back down, then all of a sudden we're going to probably pop back up into the previous high of 19.8, and then possibly into that 22K that I had on the monthly chart that shows where that target is based on that very, very long-term trend line on the monthly. So it's all working out pretty well. We just needed to get through that major resistance, and that's what we did. So another week close, and I'm buying dips some more for my long-term stuff. But not that I don't have any already, but I'm just going to add some more there. If we go to the daily, one what I'm looking at on here is one of the guys, a lot of people were asking me where I was going to buy my next puts to protect my downside, because based on everything I've been doing for a long time here, my first buy was back in here around 4,500 or so, and then that next threshold was about 7,300, and then this next threshold was about 9,500. This next threshold was around 10 or so, and then this next threshold was around 11,300. All of that together, average from all the different buys, I had different measurements on how much I bought at different times. I bought a lot more down here than I did up here, but the average is well into nice numbers. But the one thing I'm looking at is this latest, the latest one we're in right here on this latest threshold, this bull zone that we're in down here in the RSI. This move to the upside here. The shallow fib right now is right around 14K, which is great because that's the level that you're talking about breaking, and everybody's kind of we broke that 14K level now, and we moved up high enough to where the shallow fib now becomes this next key support level to watch based on what I look at. So that's that next level that I'm going to be looking at pretty closely. One thing I like about it is even if you go all the way down to the 61.8% off of this move, you're at 12.7. So, which is well above those previous highs. So we're already above, even if we retraced all the way back down to 12.7, this market is still in an overall bullish market. So those are the levels I'm watching to see if it would break down or not. So right now I bought 12K puts on my stuff to protect any major downside move that could happen. So it's just an insurance policy. So all the buys that I've had for my long-term play, I don't have to do shit with them for a month and just let it run. Or if it falls out of bed, then I buy the puts back or I sell the puts back if it falls below 12K and then go from there and just kind of work it from there. So that's what I'm doing just to protect my long-term stuff. Now the near-term stuff, I've been having a blast the last 2 days or so. I've been selling in and out. I've been making a shitload, and it's been awesome. So all I've been doing is kind of I haven't been doing it on the daily, but I'll show you here in a minute what I've been doing. But that's what I was kind of looking at. My last sell was at 15.2. I had a sell in at 15.2 based on the buys at 11.3 on my near term stuff. That's the latest sell I had from 11.3 to 15.2. And the reason I had it at 15.2 is if you look back here at this red arrow, the last time we popped up on this one right here, you got into a new high above this point right here. And then the extension was around 10.6 or 11. And as you can see, the market went up there and kind of consolidated in there, popped up, came back down, wicked below it, but it didn't go back below this level. And then it popped up to the 200%. And then went up there a couple of days, and then it started to sell off again. So the same thing on this side was from this high, and then it broke to a new high. The fib extensions was 13.2, 13.5. I actually sold some in there, bought some back on the break, but once that broke above here at this point and held as support, the 200% was my next level because it was breaking up into up above. Basically you got a few sells or a few settles above this 141, so that 13.5 became support, and then that's when the 15.2 became a target, and that's what I've been kind of doing, was using these fibs and these fibs extensions to give me areas to sell and to buy back kind of deals. You'll see it a little bit easier on like the hourly where I've been getting in and out based on the fibs. Right now, if I move this fib up, the 38.2 on the daily is at 15.1. I did have a sell at 15, but I did buy it back at 14.750 or 850 on this wick to the downside, and then went back up. There was a couple other ones, but I like how everything was doing, because we moved on the hourly into the positive range right here, and just kind of rode this up. And just like anything else, I'll take my fib at my break point and keep watching it. So if you go to here at this point, the the 61.8% level held right there. So it never really broke the 38.2. It wicked down a couple of times, but the third day or the third hour, it came back above it. And then you move up to the next high and the next high and the next high. As you can see, even when you go to here, the 38.2 still held, and then now we're back up to here, and the 38.2 is still there. So I know this is an $800 range, but as long as this is still, if this drops down back into this area, I'm going to buy more off the sell that I had, and I'll buy it back and then move it back up to the upside.
Those might be the trades that we're dealing with now. I'm sure. Do you guys remember trading early 2018, late 2017, or at least analyzing?
Sure.
Yeah, it doesn't take that long to get $800.
Yeah, we were going through $800 swings in fucking 15 minutes.
Yeah, yeah.
Like, we could be entering this. This is what has me so excited. It's just it has a lot of those signatures of just the beginning. It has a lot of. I'm gonna mute myself. I'm getting too excited.
And for me, it's about the percentages. So I'll pay close attention to about 10-15% move in a day is going to be, a very, very strong move for Bitcoin. So when it's down at, 6,000, a 10% move is going to be only $600. Whereas we get up here to $1,600, that 10% move, there we have a $1,600 candle, something along those lines is going to be very reasonable. As the price gets higher and higher, the $1,000 moves will just be a lower percentage of the overall price. So yeah, it's definitely getting some of those similar feelings myself for sure.
And the fun part about all of this so far, and I hope this keeps going because it's been kind of fun to ride, is the blue fibs on here is all the way back from this first threshold from the low when we went into the bull zone. Down in here, this is the first time we went into the bull zone from the low. And if you keep riding this up, see the 38.2% held on the break back down right here, and then you go to the next high, it wicked down a couple of times but never broke the 38.2 here, and then you keep going, and as you can see, the 38.2 held right here. As long as this keeps doing what it's doing, even when you went to here all the way to this point, the 38.2 wicked a few times underneath of it right here on the blue, but it still held. So if you work this all the way up to this point, we're at 12.4 on the 38.2. So even if this drops all the way down to this point, I'm not getting out of that's why I put 12K puts in, because for my long-term stuff, this shallow fib, which is, it's not shallow because it's $3,000, but you're talking, this is the break point where if it gets 3 days settle under this 12.4, then that to me is going to probably signal into the bear zone, and then reverse this market. So as long as this keeps going up and up and up in different ranges, and it keeps holding that shallow fib, or even wicks down to the 61.8% and comes back up, I'm still in it, and that's more of a long-term position trade. So as long as the trend is where it's going, I'm just going to keep adding at even though when you got the red negative, or when you went into the bear zone on my position trades, I never got out of them for the long-term stuff, because it never broke even though it went bearish into the zone, it never broke the overall structure, never broke that 38.2%. So even if it goes into the bear zone, I'm still going to keep an eye on that 38.2. And that to me is where I'll ultimately get out of my positions. And that to me will be a different major inflection point in the market. So I don't want to be long anymore. I'd rather be short because it's going the other way, and I want to actually play it the other direction. So those are my long-term position trades. But then on the 4 hour and the hourly is where we're doing a little bit more in and out. So even though I never got out of those long positions, I do sell and buy back on some of these on the way up to play a little bit more on the nearer term. And that's what we're kind of talking about here. So I'm hoping it keeps working, because it's working really well. Not that I've been trying to work with this over the years and trying to polish it up a little bit on how to look at the RSI and the ADX. And I think I got something that kind of takes the emotion out of it a little more, and that's the ultimate goal. So just showing you where I'm at, trying to update the trying to update some people that asked me where the shallow fibs are. Right now, if you're looking at the near term, on the near term threshold, the shallow fib is right around 14K. So if you're trading in the near term, that would be, 3 days settle under there. You might want to kind of get out, because most likely it might drop to the 61.8%. And if it gets really crazy, it might drop all the way down to the full retracement. But that's just off of this move at this point. Now the long term is pretty close to where the near term is, and that's also telling you that this is probably getting into a point where it might be done eventually, because you're kind of converging that long term fib with the near term threshold. And when they kind of converge like that, it also kind of says, all right, maybe we're getting a little overextended and we needed a correction. Could be a possibility, I don't know. But until that structure breaks, I don't want to get out of that long term stuff. I want to keep riding it. So right now the shallow fib near term 14K, and then the shallow fib for the long term is around 12.4 on my daily, because I make most of my decisions off the daily for the longer term stuff, and then on the 4 hour is when we get in and out of stuff. So that's where I'm at. Any questions, comments? What's going on? Craziness? It's been fun.
Appreciate you sharing. I think it's all good stuff, and I think I got it all. Thank you.
Yep. No, that's good. That's good. I just had a mind blank. I'm gonna shove it off to you, Saw.
All right, I'll take it over. I got a couple charts to share here, a couple things to go over.
That was like Joe. I got to stop talking. I'm excited.
Exciting time. I'm not sure what happened to the camera there, but we'll go ahead and go with it. First thing I'm going to be keeping my eye on when we are moving like this is price getting stuck in the sky. This is what is going to be resistance most of the time, and when it acts as resistance, look for a strong reaction off of that area like we were getting, and then after you keep tapping and getting higher lows, support keeps pushing up. Now we got in a spot where we get stuck in the sky and have been melting up. Instead of it being resistance, it has started to come and act as support, and this is where the biggest moves will happen when price gets stuck in here. And there will be two things that I watch for. First is going to be a move above the sky. If we really as far as I'm concerned, we are moving hard and fast, but it's still balanced as long as we're in the sky, and we can still keep moving at this angle. Even though it's fast, it's not overextended unless it pops all the way above the sky. Then that would tell me it's a strong indication of a euphoric sort of top. And until then, I'll be expecting what was resistance to be support, and we'll continue to pay attention to horizontals as price is moving. We have, look for resistance to come support, and then see the horizontals kind of lining up with the sky. So, very near term situation. I don't buy here. I buy here, and then am waiting to see, where I want to take profit. I'll scale in and out. So as I will be trimming and price keeps moving, I want to see, okay, where do I want to trim? And now I'm just going to be waiting for a potential move above this sky or breakdown of it. There are times where you just move nice and balanced, and then just get to where it's going, and then that rolls over and kind of tops without it being like a V. It's more of like an upside down U. So that would be the other thing I'll be watching for, is for price to fall out of the sky and then turn it into resistance. Like, let's see.
Hey, Saw, when you draw those horizontals, when you have those
Yep.
horizontals on there,
Yeah.
What would you look for to move those horizontals up? Like what?
Good call. Yeah, I'll pull that back up real
Okay.
quick.
I was kind of curious, like, because I know it's up in the sky area, so I didn't know if there was a way that you look at to move those horizontals up in the sky or not. I don't know. I didn't know how you did
Yeah,
that.
I appreciate that question. So we'll take a look at that here. Just wanted to kind of point out the last move that we had here where you turn the sky into support and then you get this move up here. And then once it fell out, then it kind of grinds up and looks like it wants to keep going, but it's different because you're below the sky and turning it into resistance opposed to supporting it. So that's kind of the situation that I would be looking for either a top where you get a nice correction or where you just go sideways for a little bit. So until then, I'll just be watching this closely. Basically, what I would look for to draw a new horizontal is going to be at least one red candle. If we are moving, so like here we've got a well-defined horizontal from these touches, and then once we are moving up, I would be not having the, I guess, most objective rules that you could like program into a bot, because here we do have the red candle, which it all depends on the time frame. You could potentially draw that horizontal in there and it breaks through and becomes support. If there's no correction, then there's no real high or low. And if there's only one red candle, I'm often not actually drawing these in, but I think the rules would work if you're just going to draw it in basically every time you have a red candle and you get that nice move down into there. So here we've got the correction and then drawn it from the high because that was where it resisted and then came red. We would maybe have one there and also there. So I would be more paying close attention to the significant ones like that. It's a red candle, but it didn't even take out this low. So did it move down? Not really. It made a new high and didn't take out a new low. So that's one that I would just be kind of tossing to the side. Same goes for this one. Doesn't even make a new low. Same goes for this one. So how about a red candle that also takes out the prior low? That would be enough for me to go ahead and draw on that top and see if that's going to be an important area. And
no, that makes sense.
That'd be about 15.29. So the another thing that I'm paying close attention to is a trend line that we appear to have broken through. And people have been watching me for a while have see me follow this very closely because it's a sign of a market accelerating. If you have, a rise over run that's in a trend line, like in a channel like this, that's, call this your velocity. And then if the market refuses to maintain that velocity and, it'll stay in motion until maybe a greater force, like something like the election or something along those lines, causes it to break out of this. Well, if it fell to the downside, you'd expect a sharp move down, but to the upside is where the market can really start to accelerate, such that instead of this velocity, that's where I would start to draw in a new trend line using that low and say that potentially we are getting ready to take off at a greater rise over run, which would be a main way that I would be looking to identify new phase lines in a hyperwave. If you have this, this isn't, but just say, for example, this is a phase 2, and then you break out of the top of it, that's the very first sign of a phase 3 potentially starting. So the same concept is still basically there when you have a bullish acceleration that the market breaks through to the upside. It's a sign that, that we are going to accelerate at a higher rate of return if we can support that. So that's where I would be looking for now a pullback to find support at this area. If it's able to support this trend line on a throwback, then that confirms that it is ready to not only rise at a higher rate but also run at a higher rate. Does that make sense? If the FOMO buyers are there to push it through, that's one thing. If the support moves up to support it, that's the whole different thing. So I'd be kind of looking for where these trend lines cross, call it here in a couple of weeks, November 13th, around 14.4 would be a really sweet spot for support to move up and continue to push this. Another thing that I would look for an accelerated rate of return is for price to fail to throw back to retest prior resistance for support. So like here, we had the resistance, we throw back and we test it for support. And then what we have started to see is that it didn't quite come back here to test that for support. And then if we are to really support the higher rate of return, what that means is that it should do so before returning to this horizontal. So basically, and that's kind of what causes the higher rate is it traps people in who are waiting for this return to throw back and retest prior resistance for support. When it gets very, very close, but it doesn't, that means a lot of them are still caught in. And now they have to deal with, am I going to buy here at resistance to exit at a loss, wait, or now potentially be in trouble? And as you get that snowball sort of effect, that's when I would expect price.
Hey, Saw, on that chart right there.
Yep.
You have the intersection of those two trend lines at what, 14.4 you said?
Yep.
Take the fib from the low of that leg to the upside.
Okay.
From start at the low of that leg, which is.
Let me just get these lines off here so it's not too complicated. Just wanted to.
No, leave the trend lines.
Okay, I'll get out this line here. Just wanted to.
I want to see if it matches up.
Support here, then it would be above here, and that would be critical to continue trapping people in to continue having that. So let me just go ahead and get that line out. So there's one less horizontal, and I think it should.
I'm using my eyeballs, but it might work. But yeah, right there.
So right here would be the 0.618 retracement lining up very nicely if it kind of dips its head below. What's actually really interesting, depending on where you start it, if you want to start from a low or here.
No, I would do it at the, is that the 61.8% level?
Right here, yep.
Oh, okay. Yeah, it was hard for me to see on my screen.
That's all right. So yeah.
No,
right.
I was wondering if that intersection was going to match up or not. Really, pretty close. I was just trying to eyeball it.
It's very close, and that's a confluence. That's exactly what I would look for in terms of if price comes down and then dips its head below this top trend line. Now you got the 61.8 just waiting there to defend, and also above this high.
Yeah, actually, if you started on the next little low there,
yep.
It might actually match up because that could have been the start of the run.
Yeah, I agree.
We're pretty close. Okay, I was just curious. Didn't mean to interrupt. I was eyeballing. I'm thinking that's probably the fib level right at that intersection. But
absolutely. So all right. So let's go ahead and zoom out just a little bit. And if we are able to support this new acceleration, which that's how, Bitcoin historically, let me pull up a longer term chart. Historically, that's what it likes to do after it consolidates sideways, kind of like I was touched on earlier. When you create a new all-time high, if that happens ever, then the market tends to accelerate because there's less built up sellers, and then the FOMO buyers kind of come in. So notice how you have the bottom, which is the flat, and then you have this acceleration here. And then you break through the top of this one. You try a couple times, and then where we're at, we've gone through it in a significant way. Here, it peaked above. We're looking at more something like this, I believe, although this is above the all-time high. But what I'm wanting to point out here is that once you broke through the top of that trend line, the new acceleration, if we just started with this right here, you would have kind of a penciled in trend line just based off of that. And then that does kind of represent the next rise over run. And then that was our kind of phase two. And then we break through the top of that, and then we get a new rate of velocity that is built off of the lows there. So that's kind of what here to me is looking a lot like, you know, back in here when we had the flat, the sideways, and then the move through here. So that's kind of what my eye is seeing, and that's why I would be looking to go ahead and draw in this trend line here. And if we just kind of go ahead and extend that a little bit, and here we go. So just based off of this potential new acceleration, if we do take off on that rate, and then just extend that out and see where would that get us to the high of 19.7, call it. And there were, you know, like third, fourth week of December or so would be the new rate, if it is, again, able to support a throwback into this area. So that is going to be definitely a very strong sign that as it has broken through a key area, that's when I would expect it to then accelerate as the sellers sort of disappear because they just got maybe eaten through. That's when I would definitely want to take a look at some of the volume, which would make me wonder if, like Joe is kind of saying, that these guys maybe got scared. It's not the biggest volume spike. It makes me wonder how just kind of uninterested these guys became in selling when you have, you know, the S&P 500 at all-time highs, gold at all-time highs, most assets in the world at all-time highs, and Bitcoin here, you know, I think there's a lot of people losing interest in selling, and now there's a lot of open air up here. This is going to be the near-term target for me is going to be that horizontal that we were looking at last week, which we're getting very near to at this point. So 16.2 is going to be my resistance, 16.2, 17.2, and then the last would be the all-time high. And then my support is going to be where I would expect prior resistance, in this case, to turn into support, potentially if we take off and rip up into this area, a quick, sharp, one of those sharp 30% corrections back down to 13, you know, back down into this 14.4 area where everybody waits for 10K, 10 or 12K, but everybody's still scared from how quick and how fast it's dumping down to this area. That's kind of what I would be looking for at this point, as this area of support would be still significantly above this high. If we are going to take off at a higher rate of return, I wouldn't want it to throw back and retest that high. And this is where I would expect there to be a lot of support. Where I would be buying is going to be 13.3.5 up to 13.9. Okay, and this is where I'm looking for some resistance to come in. All right, so something else that I find interesting that Fibbo might as well would be taking a look at just a couple fib extensions. Let's see here, if we are going to remember where we were looking here. Okay, there's where we're looking. So this probably looks confusing to people, and I apologize if that's the case, but what it is just a fib with it's like got two sides, extended on both sides. So here I'm starting it on this low here and connecting it to this high here. So this is going to be the 1, and then this is going to be the 0. And then what's going to happen is it extends it. So this is going to be a full 2 extension with a new 618 and 382 area here. So basically when we have this fib drawn in, First thing we notice is the 1.382 extension was right here at the 13.8 level. Second thing to notice is that the 2 full extension is right here at the 16,000 level. So we had this move from here to here, and a full extension would be right where we're at basically right now. And if we look at where that is extended below, we see that that also seems to be, you know, highlighting some critical areas. So I think that this could be, oh, I guess I moved it there a little bit. Add it there. So I think that this could be definitely an important spot to watch. And in that situation, the shallower buy zone that I would be looking at would be that 382 to 618, which is at 14.6 down to 13.8. So matching up very nicely with the other buy zone that I had outlined. So that's looking good there. We'll take a look at the parabola we were briefly touching on last week to see where that might be acting as a little bit of support. So if we start from this low and then give ourselves a nice connection to that low, that's where we started to pay attention to potential parabola as it was finding some support in this area. And now that it has continued to move up off of that, I would watch for that to act as support again until it doesn't. And then you have the fibs at 14.4 to 14.9 lining up nicely here with that parabola. And then when it's looking so nice like this, you can almost draw one on top as well. Actually, I'd copy and paste it to see maybe where parabolic resistance might come in. And what do you know, we're right around there right now. So I do think that this could be definitely an area of some selling interest, but I am with Joe that I think resistance is just going to be pretty futile at this point. So there's maybe some sort of parabolic channel to keep an eye on there. And let's see what else we've got. One thing to pay attention to is when Joe kind of mentioned this being the beginning of the FOMO stages, and I was inclined to agree. One thing that is saying there is basically no FOMO right now is the funding rates and the premium in the futures on BitMEX. Right now, perp is at 15.920, December at 16.034. You've got 2 months until this thing expires, and it's only got a $100 premium on that. That's less than what you would say is healthy. If that had a $200 premium, I'd say that's healthy, which indicates significant sellers, not this huge imbalance of FOMO buyers that's going to top a market. It indicates very healthy. It's on the healthier side. That's very bullish when that premium is under $200. And March is at 16.1, so that's up to 2. Very strong. Funding rate 0.01%. That is where it's at when we're going straight sideways, going nowhere, indicating that the FOMO guys haven't even started to jump in yet. When you've got funding rates that are at par and futures that are even a little bit below the average premium that we've seen from them out of the last couple of years. So that is very strong and indicates kind of what I was saying here, that there's a lot of sellers who are maybe getting left behind and getting a little bit worried. And the other thing that I want to take a look at that's maybe one of the most important things to me is how Bitcoin is performing against alts. As we've been talking about Bitcoin potentially not having much resistance overhead now that it's eaten through some critical areas, I would not say the same about any alt except for something like Link that's been making new all-time highs and doing crazy stuff. Anything that's been around since 2017, let's just take a look very quickly at Ethereum. to just get a quick mental comparison for anybody watching. So Bitcoin's up through the 0.618 when you draw it from the low to high. Ethereum hasn't even sniffed the 0.382. Bitcoin is up here. Ethereum's got all of this resistance to eat through. Bitcoin is up here. So therefore, it should be very hard for alts to keep up with Bitcoin unless the sellers just pull up. They just pull their orders. That's the only way that I can see that happening. And I'm not expecting it. I'm expecting Bitcoin to, if it not only eats through its critical areas of resistance, but also starts crushing alts and have money flying in from alts. Now we're really talking about, Fibbo's 200K plus target in a shorter amount of time than many would think. That's what I'm wanting is Bitcoin to really be bullish against US dollars and then also against alts. So going to be paying very close attention to this trend line. This is it. I mean, maybe we resist and just keep going down, but notice again the timing aspects of the lows and the highs that occur in alts against Bitcoin. Just going 2017 to 2018, there's your trend, 1 year. 2019, you had a 2-year trend basically here where Bitcoin is bullish for 2 years. And now here would be 1 year coming in very hot for alts, with alts having a full year. And what are they doing to the structure? Nothing, keeping it intact. They have a year trend only coming down to support 0.382 right here. And then coming into the end of the year, I think that they're in a very vulnerable spot against Bitcoin. And what I would be looking for here is a little bit of resistance from this trend line. We made a real nice move. I mean, this is from 58% to 66% in the matter of less than a month. So that is a real nice move. A little correction here. What that could do is lead us right into kind of the end of the year zone. So say we get a nice little correction leading into the end of the year that gives us some good support right here from this fib zone around the 0.382 to 618 from call it 62 to 64. And then you put in that higher low on Bitcoin versus alts, and then really take off back to the 90, back up in here. That could be a lot of money going into Bitcoin and a lot of demand that would compound on top of the demand coming from US dollars potentially, or maybe it keeps going down. This is a very critical spot at a very critical time. And the idea of Bitcoin being above the 0.618 and stuff like Ethereum being well below the 0.382, that's painting a pretty tasty recipe for Bitcoin to leave alts in the dust and take back its throne and wait for the others to bend the knee, because that is what I expect to happen. And I think that we are seeing some really important stuff with Bitcoin starting to correlate with some major markets, with some major money starting to kind of look at Bitcoin similar to gold and in an asset class like the S&P, whereas back in 2017, you had people like Jamie Dimon firing employees for trading Bitcoin. This is how far we've come in an unbelievably short amount of time. So that is going to conclude my analysis. We have gone longer than I thought. I appreciate everybody for tuning in. It's always fun to get the chance to talk with some friends and share some thoughts, and get to share some of the trades that we've been doing and whatnot. So thank you everybody for your support. I
got a t-shirt giveaway. I got to do that real quick.
Oh, perfect. And I almost forgot. And show off the t-shirt you're wearing right now.
Oh yeah, this one I got. You had made for me. I like it. It's hashtag. You know how you do FF on Fridays?
Yeah.
Well, I've always done Fibonacci Friday, so I have hashtag Fibonacci Friday. So I made this shirt up because I always put things out every Friday. spiral into the weekend, close the laptops and open the bottles.
You sure did.
It's just something I've always done for the last couple of years. So I thought I'd get a shirt made of it. But let me share my screen here. There we go. If you can see this right here, somebody in my Patreon group said, "Don't fight the fibs," a couple of weeks ago, and I thought that was a pretty good saying. So I made this shirt. I made this shirt up. So I was going to give a couple away to my Patreon guys. There was 15 people that entered in. So I'll have Saw pick a number and I'll have Joe pick a number between 1 and 15. And those are the two guys that will win the t-shirt. So what number you pick, Saw?
Well, I thought it was going to be between 1 and 100. So
nope. Only 15 people signed in. Out of all my Patreon guys, only 15 people wanted a shirt, I guess. Just kidding.
Does it have to be a whole number?
Yes.
Okay.
Not a fib number, just 1 through 15.
All right. Well, it's number 6 for me then.
All right, 6. Joe?
Lucky number 1.
All right. Bruce Montgomery was number 1, and number 6 was Sherlow. So those are the two guys that won shirts. And I will get to you guys and get the information and get you guys a couple t-shirts. Don't fight the fibs.
That's a badass shirt, man. That's pretty funny. Fibs tatted.
Thanks, man. I made it up.
I love it. I love it, man.
Yeah, I made this shirt too, but this is more just for me, just kind of goofing around. But I like that. Don't fight the fibs. So
yeah, it's a fun idea. Very fun.
Yeah, that's real nice. And it reminds me how it's been getting a little bit cold here, and I've been kind of needing a hoodie to make sure I get through this winter. Yeah, just a quick reminder to the co-host Joe to go ahead and make sure I don't freeze this winter.
Damn dog.
I'll tell you what, if you like this, don't fight the fibs. Just get a hoodie made and get it over to him.
No, I have a wool hoodie that he's gonna.
Oh, you got one. You got one.
Yeah, he needs to be warm. I got the right one for him.
That's right.
All right, cool.
He needs to smoke his cigars. I can't let him suffer through the winter. It sucks without a cigar lounge in the cold.
No doubt about that. So I appreciate you looking out for me.
Yeah, I just wanted to give a couple t-shirts away to guys that support me. So
that is excellent and great work. I love the design and
thank you.
Congratulations to the winners. So that being said, I'm taking one last look at the price of Bitcoin to see if it's still right there hanging around the 16 level. So something to keep an eye on. The last thought that I'm not sure if I summed up clearly was to what I'm going to be looking at is for one more move on alts that gets people really excited and everything, but maybe is just that sort of a little correction down to the fib level off of that trend line. So I do think that alts are in a good spot to bounce here over the next month or two, but I think it's time to be very, very careful about not getting overexcited with alts, because coming into the end of the year is a very important reversal time based on the history of that. And if we do get another bounce leading into the end of the year to get everybody really excited about it, that could be a situation to just be thinking about ahead of time, to be mentally prepared and do your best to stay on top of that action as well. So thank you all for tuning in, and I will go ahead and sign off by saying thank you guys for joining.
All right,
pleasure.
Peace out.
All right. Now, if I just might take me a while to find what happened to the YouTube thing to shut it off, so that'll just be a minute here. And thanks again to everybody for hanging around and listened into all of the analysis. Man, I'm really lost here. Let's see. I'm going to just end the Zoom meeting. I think that might work. All right. I lost the YouTube. So I'll catch you guys later. I think that this is what I need to do to end it. Well,
Yeah.
see ya.
Much-
All right.